Singlife's Legacy Proposition empowers clients to secure their financial future, ensuring seamless wealth accumulation and distribution for a comfortable and well-planned retirement. Depending on the asset class, there will be nuances in the complexity and several considerations to determine the suitable split to each beneficiaries or heirs. For cash assets, defining the split of cash is not complicated. This means there is relatively low risk due to the ease of splitting. As such, the products recommended will be focused on wealth accumulation and additional protection for the benefiting heirs. For insurance, it is relatively easy to split the asset as well, due to high transferability of insurance product. Each policy can be assigned to each of the beneficiaries. Due to the ease of splitting, the risk is low. However, there might be some market risk due to the nature of some participating insurance products. Followings are the supplementary products with the aim to equalize wealth distribution. For real estate assets, there are several consideration factors in asset split. Client must determine the number of properties they possess and the split among heirs. Considerations must also be taken for any stamp duty payments if there is less than 3 years of holding period during the sale. Furthermore, additional buyer's stamp duty, or ABSD, might be imposed on the beneficiary if they already own a property prior to receiving the inheritance. On top of that, there are several risks involved in asset split. First, the heirs or beneficiaries might disagree on the decision. Secondly, there is market risk due to changing real estate market climate. Therefore, products with the aim to wealth equalization with similar sum assured is recommended. Similar to real estate assets, SME business owners must also determine the number of businesses they hold and the split they would like to allocate to each of their beneficiaries. They also have to take into account on who will be continuing with the business. There are also risks related to valuation, which affect fair distribution of assets. Therefore, products with the aim to wealth equalization with similar sum assured is recommended to ensure fair distribution. Lastly, assets with highest level of complexity involve stocks, bonds, mutual funds, private market investments, and possession of precious metals and jewelries. It is important to determine the type of asset class account, which will also determine the complexity in the split due to differing volume, value, and mix. There are also multiple risks, including market risk as asset values may fluctuate, and other risks like opposing views of the heirs on whether to liquidate or hold positions. As such, it is important to determine the expected outcome during legacy planning, to determine how wealth should be equalized for such asset class. This will help to determine the suitable products to meet the wealth equalization or distribution needs.